Ladies and gentlemen, let me start by introducing the panel. Nina Ostrand, Head of Sustainable Finance from DNB. Kevin Rainey, Executive Director of Sustainable Finance Solutions at Sustainalytics, where he's worked for 23 years. Turjay Iverson, CFO of Agfel. Matthew Tinari, Senior Vice President, Head of Corporate Development at Atlas Corp, which is the parent of C-SPAN. And John Parker, who's my Head of Fixed Income Sales at DNB in New York. And prior to that, he had a career as a credit analyst following shipping. So, Nina, can you hear me? I want to start off with a question to you to help us understand the difference between green bonds and sustainability-linked bonds, and what are the benefits to the issuer?
Yes, no, certainly. Thank you, Jim. I can hear you. Happy to be here today. And yes, the difference between green and sustainability-linked bonds. I mean, green bonds have been around for quite some time. The first one was actually issued back in 2007, so they've been with us for a while, but sustainability-linked bonds are sort of the newest family, the newest member of the sustainable finance product family. And it was just in June of 2020 that the International Capital Markets Association, the ICMA, which is also the organization behind the green bond principles. So last summer, they published the sustainability-linked bond principles. This is a feature we've been seeing for quite some time on the lending side, but fairly new to the bond side, and definitely helped with the ICMA putting these guidelines in place. And whereas green bonds, they require you to earmark funds for specific purposes, for specific investments with environmental benefits. But on the contrary, sustainability-linked bonds are very much regular bonds. They're for general corporate purposes, but instead you link the financial terms of the bond to some form of sustainability target. For example, you can have a target of reducing CO2 emissions, CO2 intensity, and if you fail to reach this target during the life of the bond, then the coupon or the redemption price might increase. So this creates a very clear link between the issuer's sustainability strategy, their ambitions, and the financial terms of the bond. So it provides a very clear financial incentive. It provides clarity around clarity and commitment, I would say, around the strategy, which is very much appreciated by investors. So that's also in regards to your question when looking at the benefits, why are sustainability-linked bonds of interest from the issuer perspective? I would say that is just that, to sort of reach investors, be able to clearly communicate the sustainability strategy, because obviously for the past few years, we've seen sustainability grow in importance for investors. They want more transparency around the investments that they are making. They want to see that the companies they support are sort of, that they have targets in place, that they are making progress. And this is a very suitable product or finance instrument to be able to show this to your investors.
Thank you. Kevin, please talk about the evolution of the green bond market, and also add to that the importance of financing the transition of carbon-heavy industries.
Yeah, thanks, Jim. So yeah, building on Nina's introduction there, the green bond space has grown tremendously since its inception in 2007. It just reached cumulative issuance of just over $1 trillion recently. So there's huge appetite out there. Lots of standards and taxonomies emerging. The bulk of what we've seen to date is uses of proceeds that fit more cleanly into that category that we often call green, renewable energy and green buildings and so on. But there is a growing recognition that the so-called hard to abate industries out there need to come into this umbrella of green or transition finance. To date, they've had a tough time, and we're talking about steel and cement, aviation, and of course shipping as well. So So in the last few years, there's been a lot of conversation about this notion of transition finance as distinct from green, but under that same broad umbrella. And looking at things through the transition lens, it's important to recognize the need for incremental change over time. I mean, taking shipping, I mean, it's obviously it's a critical service, but also has a substantial carbon footprint at about 3% of global emissions, and yet decarbonizing is difficult. So when we look at these industries through a transition lens and thinking about, what does transition finance look like? What kinds of things can be considered eligible for, say, a transition bond? We look at things that contribute to incremental change. It may be R&D, it may be infrastructure related, it may be interim solutions, such as a role for LNG in the context of shipping. This transition lens, it lends itself well to both use of proceeds bonds and sustainability-linked bonds, the distinction that Nina spoke to earlier. But in both cases, investors are really interested in what targets are investors setting, our issuers setting, and what strategies, what sustainability strategies do they have in place to achieve those targets.
Thank you. Odfjell recently issued a sustainability-linked bond. Terje, can you take us through the process, both the preparation and the launch of that bond offering?
For sure. Thank you, Jim, and thank you for having Odfjell at the panel today. As you mentioned, we have already been out in the market and issued a sustainability-linked bond, and we are more than happy to talk about that, of course. And I just want to start with saying that Odfjell as a company, being 106 years old, focusing on terminals and chemical tankers, kind of sustainability has been in our roots for many, many years. We are a sustainable company, and for such regard, a sustainable linked bond makes all the sense in the world. Just to talk about a bit about the process, we have seen, as many of you, an increased focus on ESG in the financial markets throughout the last years, especially I think during the last 1 to 2 years. We have seen clearer and clearer ambitions on ESG from investors, including also some of our traditional bond investors, if you can call it that, which have flagged to us recently that they're more and more focused on ESG in their investment mandates, meaning it was becoming more and more difficult for some of these investors to continue to reinvest in bonds in traditional shipping companies. So based on this, we kind of started talking further with the investors, including our relationship banks and also their sustainability teams. And we got kind of very positive feedback on what we as a company had already done on the ESG front through many years, and also get a clear impression that we were among the shipping companies that were in the forefront in this. For example, we had demonstrated that we had increased the energy efficiency for our fleet with 30% since 2008. And Odfjell actually now has the most fuel efficient fleet within the chemical tanker space in the world. So we started then checking with the bond investors and banks, kind of checking the appetite for linking our financing with our ESG targets. Through the process, we work closely with our Rangers ESG teams, I think for around 12 months actually, preparing this. And of course, the banks, they have their industry experts when it comes to ESG with a lot of dedicated resources to take advantage of. And then we needed to find a kind of the right balance between investors, the framework. We were working on the principles, external kind of second opinion, kind of verifying the framework, and also the term sheet and the commercial terms. We wanted to keep it simple, meaning that kind of have one meaningful target is easier to understand than having a multiple number of smaller targets, even though the kind of the commitment might appear greater if you have several targets. But we ended up with kind of the following measurable targets that we agreed to kind of link our bond to our fleet transition program and reduce the carbon intensity for our control fleet by 50% by 2030 compared to 2008 levels. And of course, since this was a 4 years tenor we discussed, this means that we kind of need to kind of be on the trajectory towards the 50% throughout the loan period, meaning that we need to reach a reduction of 31% for our own fleets by June 2024 to avoid, as Nina also told about, an increased redemption price for the bond at maturity. We think that's kind of the way we link our framework to the kind of sustainability financing and our ESG targets is a testament to our ambitious targets and our commitment to actually reduce carbon emissions as set out in our fleet transition plan. And I must say that the reception we got after launch and the issue was really great. We ended up receiving much more positive feedback than we expected, especially since I think this was the first sustainability-linked bond in the world within the shipping sector. And we saw that more than 1/3 of the book actually was kind of covered through what we expect, kind of course we had this ESG link included in the financing framework. And also to add that internally, this was a kind of true firm-wide effort, meaning that we had a cooperation between the various departments, technical department, the commercial department, the finance department, and the executive management to kind of establish this. And then also, I think that the process, finally, I think the process in itself is also a push to the organization to actually move forward and make sure that initiatives and good ideas are discussed and taken care of and taken action to further increase the focus on the ESG. And especially on the environment, what is good for an environment is also often good for the business, especially when it comes to reducing the fuel consumption for our fleet and thereby also reducing the emissions to the environment. So that was some headlines from the process that we have been through this early in 2021.
Thank you very much. And Matthew, you went through a process of your own as it relates to Seaspan just a few weeks ago. Could you take us through that, please?
Yeah, sure. Thanks, Jim. I would echo the experience that Odfjell had. I think just adding to it, we were a first-time issuer in the Nordic market. So from our viewpoint, you know, I just want to let the audience know that it did look fairly similar to a standard bond process. So it may seem intimidating to set up the sustainability link, but if you have a company that's focused on ESG on a daily basis, you likely already have a lot of the materials, and you do work and pull together everything with the operating teams, the technical teams, the management team, finance to just present it in a way that's digestible to investors. And I think having that strong focus at Atlas and Seaspan, you know, we like to do things the right way as we think about it. So we made the decision early on to pursue a sustainability link. So from there, it's really just setting your KPIs. So that's an area that requires a lot of thought and work with outside parties. So we were fortunate to work with some of the people on the phone here, like Nina and Sustainalytics, to help us review our public targets. And we, given our business model, decided to go with a go-forward commitment to investing capital into alternative fuels. Since our ships, we operate at the direction of our customers, so less direct day-to-day control over the emissions and the speed and what have you. So we committed to investing 200 million of capital into alternative fuels. So that's meaningful for us in a 3-year term of the bond. I think one thing that it would be great to see is for companies that really do focus on ESG, instead of just having a negative penalty, which is what our bond has, and I think Odfjell is similar, you know, it should evolve over time to having a benefit and a penalty. So that will be interesting. But in terms of the process, really the only 3 work streams I think that are incremental in setting up a sustainability link is that framework that was just talked about, which is published with your bond, a second party opinion, which you should be doing anyway, just to confirm that your KPIs are within market and the right level of stretch goals, and just a template around annual reporting against your KPIs. So it was a fairly straightforward process from our standpoint. We worked with, again, Sustainalytics, which was great. They helped us with a large sustainability linked bank loan previously, so they knew our business well, our ESG program well. And then similar to Odfjell, we had great receptivity in the market. We were first time issuer again, so our view is in conversations with investors, it did create a lot more demand, the sustainability link. And given our growth pipeline at Seaspan, we decided to upsize it, a pretty substantial amount, our bond, ahead of closing. So it was a great outcome. It was a streamlined process, and it may sound intimidating, but it worked well for us.
Thank you very much. John, give us your U.S. perspective and how important were the U.S. investors or North American investors in the Seaspan deal?
Just to be clear, my perspective is working for a Norwegian investment bank selling bonds into U.S. investors, and my view, or I think what is true, is that the U.S. markets, bond markets, are well behind the Nordics in ESG interest, but we expect that to grow and to catch up with the Nordic interest in ESG. And just to put some numbers around that, if you look at the 2020 overall Nordic issuance, and this is across investment grade and high yield, 8% was either ESG or sustainability linked. Globally, it was only 2%. And then if you go down to the high yield markets, the US high yield market is about 20 times the size of the Nordic high yield market. So we're talking about a smaller market where ESG is very important. Year to date, Nordic and the high yield market ESG issuance or green issuance is about 19% of the deals that have been done in Norway year to date. So that's a big number. That's just deal count, not size. But the DNB issuance and deal count is 50% either green or sustainability linked bonds. I put US investors into 4 classes. The first would be well-established ESG mandates. They tend to have their own standards. They don't really rely on third-party views. They have their own standards about how they judge a green bond. Then we have a lot of asset managers. Almost every asset manager is developing their ESG mandates. They tend to follow third-party opinions. They are cautious on transition bonds. They don't want to have their first bond in their ESG portfolios be TK shuttle tankers, for example. A third class is investors who really care about these things, but it's not necessarily a part of their mandate. And those investors seem to show up reliably in green and sustainability bonds. Then we have a fourth, and all those 3 classes of investors are growing. Then we have a fourth class where it's really not part of their strategy at all. But I would think that class is shrinking. It is worth noting that everyone I talk to, or most people I talk to, when they put together a credit memo, they need to have a section on ESG in their credit memo. How is this bond, how does it fit into the ESG world? And not surprisingly, all the investor presentations we see have some ESG language in them.
Thank you, John. Okay, we've got to be cognizant of the clock, so we've got to pick up the pace just a little bit. But Nina, you've been through this process many, many times. Is there anything you'd like to add to the processes we just heard?
I think sort of building on what I think both Terry and Matthew said is that sustainability is not necessarily a new topic, and to these 2 companies, it's something that you've been working on for a very long time. It's a lot of work has already been done internally, and these processes are simply about translating the strategies and the work that has already been done, the ambitions for the future, into a standardized product, be it green or sustainability linked bonds, but sort of translating it into a standardized format, which I think also creates an additional arena to discuss these topics to investors. Because I think our takeaway from both these processes was also that this was very interesting to investors. They were keen to understand more about this sustainability link. Again, this is a fairly new product in the market, but I believe many investors came to the presentations simply because they were curious to understand how did the sustainability link work. And this also gave an opportunity for the both companies to actually discuss more about the sustainability work taking place in the companies. And this is, of course, something that is important in most transactions, be it a labeled bond or a regular bond, but it definitely provided this extra arena, which I think was very relevant. And it's something we hear from investors, that they want more and more transparency. I think especially sustainability linked bonds compared to green bonds, they sort of fill a gap in the market where for some companies, green bonds might not be the best solution. It requires the earmarking of proceeds. It's very efficient if you have large capex programs going into very green assets, but if you don't, if you're in transition, you might not have enough green assets yet, or you might have many smaller flows, which are then sort of administrative, more tricky to allocate. Then the sustainability linked concept provides a very efficient product, which we haven't really had available in the market in the past.
Thank you very much. And Kevin, let's keep the pace as quickly as we can, but I'm going to ask you a very long question. How does Sustainalytics ensure that KPIs are relevant and targets are ambitious enough? And what's the approach to determine what targets are reasonable and realistic for a shipping company?
So as Nina, I'll just clarify that, or refer back to what Nina noted earlier, which is that in June, the sustainability-linked bond principles came out. And so when we provide a second party opinion on a sustainability-linked bond, we're opining on a framework in relation to, or its alignment with those principles. And so, of course, central to those principles are the key performance indicators that are used, or KPIs, and then the sustainability performance targets. So what's a strong KPI? When we've developed a scheme, an internal scheme to assess them, and so a strong KPI has a clear methodology to calculate performance. Preferably, it is based on an external standard, which means that everybody else is using the same methodology, or at least some others, for the purpose of comparison. And so you can compare with peers, or you can compare with some other external benchmark. In the context of shipping, an example of this is the average efficiency ratio, which is a measure of a ship's carbon intensity per ton per nautical mile. And it is very commonly used and useful for comparison and benchmarking. Now, with respect to the targets that are set, that is, the targets to improve performance on those selected KPIs, there is, of course, the critical question of how ambitious do they need to be. And we have a scheme to assess this. We may assess against past performance of an issuer, or against performance of peers, or against some external benchmark, such as a decarbonization trajectory. And this is actually the strongest approach, is against a trajectory such as that of the International Marine Organization, which has set targets for decarbonization, 50% reduction by 2050, but aiming for 70%. We consider that to be a credible decarbonization trajectory, although net zero by 2050 is generally considered to be the strongest trajectory to aim for. But the IMO's is also credible. So we're looking, when we're assessing say a shipping company, we're looking at it's a variety of factors that we are benchmarking against or comparing to. Again, ideally, alignment with an external trajectory is the strongest approach, and we'll get the strongest assessment based on our scheme.
Thank you very much. And we've heard a little bit about Agfeld's ESG efforts, but if you could just add a few more points from a general point of view, your targets, transparency, and the ratings, what efforts have you made over the last few years?
Yes, I will, and I will also try to be short. I understand we are running against the clock here. I would say that, as I mentioned, through the bond process, we saw clearly that sustainability kind of has been in our genes for a very, very long time. That is the way we are running our business. We are showing that we are a sustainable company, but we're also focusing very much on being transparent and making sure that we are reporting on the progress that we are actually delivering. And I think we have demonstrated through many good initiatives the last years, and also received quite good ratings compared to other shipping companies. For example, we got a rating from Sustainalytics last year, where we, as one of 98 companies within our industry, scored as #1 on business ethics. So we are very much paying attention to kind of what scores we get and kind of what feedback we get on what we kind of communicate and report to the market. And also during the last year, we included sustainability in our overall strategy. We also announced our ESG strategy last fall, as I said, to reduce the carbon intensity by 50% by 2030, which is absolutely measurable and kind of committing, as Sustainalytics talked about, and also higher than the IMO target of 40% reduction by 2030. We also have a target to reduce kind of the total climate neutral fleet from 2050 and onwards. And transparency on ESG is very important, and we have been reporting on ESG since 2019, following the guidelines from the Norwegian Ship Owner Association, and also in line with the new Euronext guidance that has come now on ESG reporting. And we also continue to report to UN Global Compact, Carbon Disclosure Project, etc., Maritime Anti-Corruption Network, and all the various initiatives on ESG that is out there, including being in dialogue with Sustainalytics, ISS, and others. And we want to have a high standard on the ESG reporting because we know our stakeholders want to know how we mitigate risk, and we believe being open and transparent is the only way. Going forward, I absolutely think that the rating agencies will play an important role, but we're also paying attention to kind of making sure that we are doing the right thing. First and foremost, how we do our business, how we handle our people, external stakeholders, the environment, local communities, anti-corruption work, etc. And we think that setting ambitious and measurable targets that is kind of risk mitigating is good for the business. And it's important that the investors, in addition to reviewing kind of the reports from Sustainalytics and others, are also actively engaging with the companies to better understand how they think and act with regard to sustainability. And as a last important point, I also think that it's important that investors actually back these types of products or projects like this sustainability bond and similar, if they really are serious about ESG, because the decarbonization of shipping is going to happen, I think, much faster with the support from the capital markets.
Thank you very much. And Matthew, can you take us through some of the efforts that you've made within ESG in recent years?
Sure. So I couldn't agree more with all of what Turi just said and Odfjell's efforts. Well, I guess for Seaspan specifically, in addition to our investing hundreds of millions in our Saver vessel design since 2012, which substantially reduced emissions on our larger tonnage. We've done a number of vessel optimizations, bulbous bow, propeller replacements, trim optimizations. I guess from a go forward, at the Atlas level, which is the parent that has both Seaspan and APR Energy, we formed an ESG committee, and we're very focused on developing and articulating a clear strategy across both businesses. And given the recent formation of Atlas, we are expecting to publish our first ESG report later this year, and we're working with some third parties to develop that, and benchmarking and materiality and all of the important metrics. We've added a section to our website to start tracking this, and we expect, I'm not going to give you the spoiler, but we expect to publish some more public information later this year. Similar to Odfjell, we're member to all of the Marine Anti-Corruption Network, the UN Global Compact. We're getting a whole slew of ISO certifications. So there's a lot of time and capital being invested into ESG, and we look forward to sharing that.
Thank you very much. All right, now it's prediction time. How does this develop into the future? How do the capital markets continue to develop around this? Will the US close the gap with Europe? I may not have time to get to each and every one of you, but why don't we start with Kevin in terms of your predictions?
The one thing that we really hope to see is more transition bonds. I think it may have been Nina that noted that there's been some reluctance on the part of some issuers in hard to abate industries. And we actually see a real appetite among investors for credible transition bonds. It's challenging, but it's quite possible. And we think there's just tremendous opportunity there. So it's a hope and I guess a bit of a prediction as well.
Thank you. Nina.
Yes, where to start? But if sort of to focus on sustainability-linked bonds and the whole sustainable bond space, I definitely think we're going to see large growth in this market in the coming year, not as a replacement of green bonds, but that sustainability-linked bonds and perhaps also transition bonds. Some talk about sort of the need for transition bonds might be reduced with the introduction of sustainability-linked bonds, but it definitely enablers of transition. So I think we will see more of those types of bonds, perhaps replacing regular bonds, simply adding more transparency to the market together with the green bond market. So I think we have an exciting 2021 to look forward to.
Excellent. Matthew.
Well, I think the short answer is yes. Other geographies will over time definitely catch up. I think it's an increasing focus on ESG. Companies who don't have it in their DNA will likely see, a more challenging to get availability and access to capital. On the flip side, hopefully companies that do take it seriously and focus on it will have, improved and lower cost access to capital. So just further enabling growing those businesses in the right way. So that's what I would hope and expect as my response there, Jim.
Thank you. Turjay.
I think I agree with the rest of the panel, of course, and I think going forward, this is the way to do bonds. I've noticed just recently that the French energy company Total said that from now on they will only issue sustainability-linked bonds. So this is going to happen, and I think it's going to happen quite fast. And also for other kind of financing, for example, we are discussing financing with our banks now for some refi of some vessels. And we plan to use the same framework. It will be sustainability-linked financing, most likely. And I think also we see that the banks are quite interested in doing this, and we see kind of the increased competition amongst the banks to participate in such a financing. So we think we can use this as kind of develop a competitive edge for Odfjell and also, of course, for other companies that are in the forefront and kind of are doing the right things and can utilize that and kind of link the ambitions and the KPIs up to the financing. That could be a competitive advantage, both to get financing, to get the right price for the financing, but they could also kind of in the longer term also improve kind of your commercial discussions with customers, the charterers, to also kind of paying attention to that and being willing to kind of pay for that those commitments when you're offering those.
Thank you very much. And John Parker.
Yeah, just a couple of quick comments. One pushback I get from U.S. investors on sustainability-linked bonds is the links are things that the issuers would have done in normal course of business. So it's important that you are able to convince people that actually these are above and beyond what you need to do for your business. The other thing is, as I said earlier, growing in interest in the US, but at the end of the day, the credit worthiness of the issue really trumps the ESG for just about everyone.
Thank you very much. And I think that's the conclusion of our time. I want to thank the panelists. I want to thank the audience. I hope that we were able to educate and entertain. and look forward to continuing this discussion in the future. Thank you very much.
Jim, thank
Thank you,
you,
everyone.
and thanks to the panel. I think I was struck so much by the leadership is what kind of came to mind for me a lot for DNB in terms of developing this investor base and market, and imagining John Parker's investor buckets kind of shifting over to where more people, more investors will include this in their strategy. In Odfjell and Atlas Seaspan, not only in terms of being first issuers to market, but having practiced these kind of principles maybe long before ESG was sort of how we describe them. Sustainalytics, I just saw a slide yesterday of the market share of second opinions, in which you're sort of leading in that category. And even before that, scope for developing this new way to look at 70,000 individual ships. So I thought it was a terrific session, and want to thank everybody for your effort and participation in it. Also to say that we'll be back at 12:30 for our fourth and final session of the day, in which we'll have an interview with Hapag-Lloyd CEO Ralph Haben Johnson, and a panel on LNG as the pathway to decarbonization. So thank you to everyone for the panel, and we'll see you soon.
Thank you.
Thank you.
Thank you.